Hi, it's Anthony Meisner with Land Title. Came to talk to you a little bit about luxury stats. So let's talk about the latest and greatest. Let's just talk 2 to 3 million. If you're working with a client that has a listing coming up or is already on the market and they're kind of in this window, that's what this is designed for, right? So let's talk through what's happening in that marketplace. Here are homes sold in the city of Boulder by price range. So you can really see, you know, between 2 and 2.5 million. We have the most sales every year, right? You can see we've already done 50 this year. This is a really big deal, right? This market is really moving along quite well. You got 2.5 to 3 million, but I think the important part about this graph and what this really tells us is just how many less people are shopping at the higher price points. So when you're working with somebody who, might be on that edge where like they think it's worth 3.2 or they want 3.2 million, you're doing some comps, you're pulling them in at, 2.8 or 2.4 even, right? Like sometimes there's a big gap between what people think. This slide could definitely help understand, who are we looking to capture, right? Or who's even shopping in that round or in that range. So that's what I like about this one. It gives you some insight into, how many buyers are actually out in the marketplace. Now, City of Boulder average days in MLS by price bracket and by year can help you understand over time also really what that's looking like. So the one thing when you're setting expectations here is really understand based on the price brackets that people are working in, things are going to move at a different pace. If you look at the 4 to 4.5 million range, look at 23. There were some times where even for the whole year, it took a really long time to sell. Here we are, lower price point. Let's talk, 2 to 3 million specifically. You can see right there, look, it's only been 30 days on average to get a house under contract from 2.5 to 3 million. Now, if we're not experiencing that, why aren't we experiencing that, right? So this is a good one to point to. Most homes that are coming on the market that are buttoned up and that are priced correctly, there is a buyer looking for them, right? We can see that buyer activity is doing pretty well. 2 to 2.5 million. We've had a few more struggles this year, 52 days in MLS, but it's not that there aren't buyers available. It's about setting proper expectations and patience. It's also about pricing it correctly, right? Because if we can't get the price low enough to where the buyers are interested, trust me, the buyers know. The buyers are out there watching. Another really good second check is price per square foot. So this is average and median price per square foot by price range, right? So when you're looking in these price ranges, make sure you understand the quality of the luxury we're talking about, or maybe the location is driving a lot of this. Really, what should we be expecting, right? Who's our competition out there in the city of Boulder? And so in the city of Boulder for these price ranges, look, in 2025, we've actually felt a 4.9% reduction in price per square foot from 2 to 2.5 million. So that tells you that there is a lot of price compression taking place there. From 2.5 to 3 million, it's been 5.5% drop. Now it was up a little bit the previous year, so it's not all bad, right? It's not necessarily the worst thing. The median also tells a little bit of a different story in these ranges, but not a hugely different story, right? Maybe a little bit less price compression at the 2 to 2.5 range, but that 2.5 to 3 range, a larger price drop, right? So what we're seeing there is we're seeing the fact that those price points are still price sensitive to interest rates compared to over 3 million, where houses need to be spectacular. But if they are spectacular and they're worth 700 a square foot, then they truly do warrant that. And there is a different buyer pool there, right? So when you're having this conversation, there is price drop happening in the 2 to 3 million range, where the price per square foot would warrant that the stuff over that just has to be newer and nicer, right? Otherwise, it isn't warranted. Now, if we look at active listings on the marketplace, this is another one that's a hard conversation in some ways, right? If you're in the 2.5 to 3 million range, look how many more active listings are on the market. We have 44 in the city of Boulder right now, 76% more than this time last year. So a huge influx in inventory at that price range. But the 2 million to 2.5 million is actually settled. There's less inventory. Could be because of those price drops. It could be because of the slowdown in buyer activity, but there's still more houses for sale, and we need to find where our vein is, right? So where's the spot that you think you want to list, right? And then you compare that to over 3 million. Over 3 million, only 22 homes on the market. New listings last month were 3, or over the course of the last month. And then you look into the other price ranges, significantly more competition, but significantly more buyers. The under contract range, this is really important to look at too. we looked at how many homes are on the market versus how many are coming under contract. So in July, we saw 3 homes go under contract between 2.5 and 3 million in the city of Boulder. That's 25% less than it was this time last year, but we've had a really good year. So that's going to bounce around a lot. Now, the 2 to 2.5 million range, we had 10 go under contract, significantly more than this time last year. So just to put it in perspective, where buyer activity is really taking place. And you can really see with the pendings just how many fewer homes are going under contract over those price ranges. Month supply of listings, though, between 2 and 2.5 million, we have 6 months of inventory, and it's been like that for a few years. Getting into the 2.5 to 3 million, we're now up to 9 months of inventory with those 3 sales taking place last month, right? So there's not as many buyers, there's way more homes for sale, and it's really rising that benchmark. So it takes longer to sell a home, but it looked like, when we were looking at that, if you're the right one, average days in MLS would show us, if you're the right home on the market, it could sell faster. Also, take a look at this. At 2 to 2.5 million, we have 49 days in MLS, very similar to last year. And if you look at the 2.5 to 3 million range, 40% more average days in MLS, 70 days in MLS. And if you bump that up to that 3 to 4 or 3 to 3.5 million range, 136 days in MLS, 70% more than a year ago. So that should go to show you just how drastically different it can be if you get into the right pricing bucket. If your home is on the cusp, you really may want to drop it down below one of these thresholds. You're going to get a different buyer pool, and there will be more people there looking at homes. The average percentage close price to list price is another one that's worth looking at. We tend to see the higher the price of the home, the less listed sales price there is, because there's more inventory, which is going to create more competition. Not always the case, but at least for most of these, it's really easy to look. 2 to 2.5 million, you can expect 96.6% last month, very similar to a year ago. And then 2.5 to 3 million with that added buyer pool that's been in there, we saw 0.7% rise in that. So it's only 96%, right? Instead of, less than that, what we had last year. And if you get over 3 million, 95%, right? Because there's just less buyers that can afford those properties. So it's more competitive. The showings, I think this is one thing you can look at. I would take this with a little bit of a grain of salt, because these small price buckets don't have a ton of detailed information for us to look at. But what you can tell is, if you're getting 3 showings per listing in July from 2 to 2.5 million, that seems to be right in line with what you should expect. But the 2.5 to 3 million range, it's significantly less than that. So there are a lot more buyers looking under 2.5 million. So hopefully that helps there. There's a few other slides that I have in here to kind of have some of these conversations. So percentage sales price to original list price and based off its days on market, right? So when it's on the market for a longer period of time, this would generally warrant the fact that, over the first 50 days, it consistently trends down. If you wait a little bit longer, wait for that right buyer to show up, that could definitely be a strategy. It's not always the best strategy, but if you can find them in that window where it still hasn't sat for too long, you can get closer to 90, 95%. And if it waits way too long, the longer you're on the market, the way more likely you are to get less for that home. Now, if we're looking at percentage sales price to list price from 2.5 to 3 million, you can see sort of the same trend, right? I think what happened in the 2 to 2.5 million is that we had a lot of priced homes that were way overpriced and that came into this range because maybe they were listed at 2.6, 2.8, and then they come into the 2.5 million, then they finally sell. So maybe they were listed like that one at 210 days, could have been listed at over $3 million, right? And eventually it sold for under 2.5. So that would put it in that price bucket. And you can see that over the course of time, but the one thing that's interesting here is you even had one at 14 days that sold for closer to 85% of list price. So it was just pie in the sky number. Luckily, the buyer and seller could come to terms and get something done early, but I think there's a lot to be said about how pricing correctly from the get-go can make a big difference for how much you're going to get for the home. So that's really what that slide's for. City of Boulder average price drops. This is just over the course of time, right? So last month, it looked like we had $186,000 was the average price drop for a home on the market that went under contract. But you can see over time, in 22, we had that big drop off. But most of the time, it seems like the longer we're in this difficult market, it is trending down where price drops are showing maybe a drop in luxury real estate prices in the area, right? So the one thing we need to make sure we do is just, if you can price it from the get-go well, you can see it can sell faster, you can get more money for it. And if it sits on the market, you will have to do some pretty aggressive price drops. I would say the average right now is probably closer to that 300,000 mark. They've been bouncing around a lot, but you can really see over the last couple of years, you might be hundreds of thousands of dollars off the price if you didn't price it right at the beginning. Okay, average sold price to original list price. What percentage are we looking at? I know everyone has been asking for this slide, so I took a stab at this. Basically, what this is saying is, our normal data we look at list to sale price, but this is 94% right now, and it could be a little bit lower than that depending on the month. But it seems like for the year so far, we've kind of been trending in that 95-94% range. That means if you listed it at $1 million, it went for $940,000. In this case, you double that, right? So let's say we were listed at $3 million, right? You took a 6% drop off of that price. So that would be what you should expect when you're setting expectations. That's just price drops and sales price combined. The big difference here is it still doesn't account for concessions. And if people are going to get a loan on it, you should expect some concessions. And what we have seen lately is we've seen larger concessions on the larger sales price homes. If you need to compare these by year, this is the sales by year by price range. This can help as well, but this is 22. We have 23, where you saw a lot of activity really start up and a lot more of the really ultra high end, which was interesting to see. 24, that really continued, right? That ultra luxury behavior is still out there, maybe a few less in the lower ranges, but then 25 so far, we've been off to a really good year. So you can see that. And it looks like we did have one more that didn't make it on the slide because it was so far off, but we did have one $14.5 million sale. But it is kind of interesting to watch because, we're just over halfway through the year and, we're way on track to do better than we have in years past. So hopefully this luxury analysis helps out. If you need the slides, you need information, reach out to me. Always happy to help. This is Anthony at Land Title. Don't forget to like and subscribe to the YouTube channel. We'll see you next time.